Our office speaker, Krista Costa, is an ODU alumnus who majored in finance and international business. Krista is Senior Vice President of Corporate Services and Office Leasing at Devaris Real Estate. Please join me in welcoming Krista.
Thanks, Larry, and also to the E.V. Williams Center for Real Estate and the Strom College of Business for having me back to present the office market report. Again, I'm Krista Costa with Devaris Real Estate. The office market was abuzz at the beginning of 2018. Would Amazon choose Hampton Roads for its second headquarters? The excitement quickly faded as the list of 20 cities was announced in late January that were shortlisted. Our Northern Virginia neighbors were ultimately selected for half of the HQ2 requirement. But even without Amazon, our office market continued to grow. The total office inventory in Hampton Roads at the end of 2018 was just over 52.5 million square feet. The office vacancy rate ended the year at 8.2%, down a point from 2017. The continued decline in vacancy has given landlords the confidence to keep marginally increasing rents. Rents grew slightly in 2018. The net absorption returned to normal after a near record year in 2017. Hampton Roads suburban submarkets performed better than the central business districts in 2018. This trend is opposite of what happened nationally, where CBDs outperformed the suburban submarkets. As a result of suburban demand, Class B rents in the Hampton Roads increased by 6%, almost double the Class A rent growth. Continuing the trend from 2017, the majority of the large office leasing transactions completed during 2018 were renewals. The largest of which was the U.S. Air Force renewal signed at 300 Exploration Way in Hampton in April of last year for 97,488 square feet. The largest reported new lease was 824 North Military Highway, where in August of last year, Optima Health leased an additional 44,428 square feet. This lease brought the building, a retail to office conversion at Military Circle Mall, to 100% occupancy. As predicted, we saw a substantial increase in office sale activity as purchase prices in first-tier and second-tier markets drove investors to third-tier markets. The 3 large office buildings traded in downtown Norfolk last year, and 2 of those buildings were acquired by new-to-market investors. The total 2018 sales volume reported by Costa was $340,927,000, almost $100 million more than 2017. The largest of the sales transactions was by Hertz Investment Group as they entered the Hampton Roads commercial real estate market with their purchase of Dominion Tower in December. The 26-story, 403,276 square foot Class A office building was purchased for $79 million, or $195.90 per square foot. The 93% leased office building was purchased at just under a 9 cap on in-place income. Hertz Chief Investment Officer Jim Ingram stated that, quote, "They really like the market and will be exploring additional opportunities here." Another notable sale was the 86,400 square foot Lakeview Technology Center 2, located in the Harborview submarket in northern Suffolk, purchased for $16.3 million by the Virginia Department of Transportation. The building stood vacant for 9 years after its untimely delivery in June of 2009 until its purchase last year. This transaction was notable as it removed one of the few large blocks of contiguous office space available in the market. With office vacancies shrinking, we are starting to see some spec construction. The Beacon 1 building at 2 Bayport Way in Newport News was under construction in 2018 and delivered earlier this year, ready to accommodate Class A tenants from 3,000 to 54,000 square feet. In the second quarter of 2018, pre-leasing commenced for the speculative 500 Volvo Parkway in Chesapeake. It will be a 150,000 square foot Class A office building that will break ground this year and is slated for completion mid-year 2020. This 6-story office tower will join the new Dollar Tree headquarters office building on the 69-acre Summit Point mixed-use development located in the Greenbrier submarket in Chesapeake. Also worth mentioning is that last September, Dollar Tree announced plans to move approximately 700 workers from Family Dollar's Matthews, North Carolina headquarters to Chesapeake. This move will give Dollar Tree the 3rd most office employees in Hampton Roads outside of the manufacturing, healthcare, and school sectors, according to the Hampton Roads Economic Development Alliance. The majority of other new construction in 2018 was for owner-occupiers in the healthcare sector. While some spec development has started, don't expect to see construction cranes lining the Hampton Roads skyline like in many other cities. Rents for new construction office buildings will be at least 20% higher than the market rent. The rising cost of construction were cited as the top real estate and development concern, according to a recent ULI survey. Rising construction costs are due to increased materials demand from several devastating storms in 2018, new foreign trade policies limiting the importing of materials, and a shortage of immigrant construction labor. And speaking of labor, I would be remiss if I did not again address the growing lack of qualified employees in the professional and business services sectors as presented by Dr. Agarwal. The U.S. Bureau of Labor Statistics is reporting that for the first time in U.S. history, there are too many open jobs and not enough qualified unemployed persons. This is no doubt hampering the growth of local professional services businesses and the demand for office space. But this is great news for students here at ODU. There are professional job opportunities right here in Hampton Roads. Most companies are realizing that employee experience is critical in attracting and retaining talent. Employers are seeking office locations with increased walkability. Employees want to be near amenities and entertainment venues. The traditional office design is evolving as companies incorporate flexible workspaces into their offices. Dare I say, following the co-working design trend. The co-working trend continues to transform the office market. In 2018, Richmond-based co-working company Gather entered the Hampton Roads market, leasing spaces on both the south side and the peninsula. Other national co-working players are still circling the area. According to Costa, U.S. office space taken by co-working companies has increased more than 550% in the last decade. But co-working is also growing in retail and multifamily settings, further weakening demand for traditional office space. As office building landlords make deals with the co-working companies, the effect on office building valuations remains to be seen. So what do we see for 2019? Let's talk about the big elephant in downtown Norfolk. In December, Norfolk Southern formally announced that it would be leaving downtown Norfolk and moving its headquarters to Atlanta, vacating its 373 500 square foot, 22-story office building. The move-out process is expected to take 2 years to complete. The building comprises almost 13% of the Class A office space inventory in downtown Norfolk. The vacancy rate for the submarket could jump from its current level of 10% to 23% in 2020. Looking ahead, the Hampton Roads office market will remain stable with slight growth forecasted for 2019. The volume of office leasing will be about the same in 2019 as in 2018. Office vacancy rates are expected to further decline in 2019 because of limited new office supply in the market. The projection is for additional rent growth in 2019. Office sales are projected to remain robust this year. We should continue to see activity by out-of-market investors. The Opportunity Zone program has also piqued a lot of investor interest. While the Department of Treasury and IRS have yet to finalize the regulations, the tax breaks on capital gains are very attractive to investors. The fate of the Norfolk Southern office tower leaves a big question mark on the downtown Norfolk submarket. With rumors of potential users waiting in the wings, could this block of space be leased by the end of the year? I want to thank my team at Devaris, thanks to the Costa team, and thanks to Andy.
Thank you, Krista.